Again, welcome to the Breakfast Club. It's Tuesday, February the 12th, 2024. Sorry, 2025. Let's get into the charts. Let's look at the charts. I hope you've all had a great day. I had off yesterday. Not really a day off, but I hope you took the afternoon to... The morning was pretty choppy. You find yourself settling in on something there. Find yourself some happiness outside of the charts. It's not all candlesticks and wicks, Let's look at the daily chart. Let's put this big here. So I like the fact we've come down to this. No, that doesn't count. For me, it's not validated yet. So where are we at? I don't really see much in here other than this relative equal highs above us still. There's nothing really to key off of here in a daily chart that I can see other than the longer, like way down here. Yeah, I don't see anything in key off of anything there. Still looking for those relative equal highs. See this drive up in here and start making some highs. So the rejection block's next, then half that wick again. See if we can get through yesterday's high and then start pushing for those relative equal highs again. On the 1 minute chart, you see a reversal's already occurred here. I've taken out some lows, hit the bottom of a weekly. Is that a weekly level? A gray level. Taking out some lows. You got a nice reversal here. You've traded up above. Not only the reversal, you've traded above the bullish candle here as well. So you trade back inside the bullish candle, and we're looking for this to go higher. So that's what I'm looking at. If we close below here, go with Hadi's second drawing he's got in his chart, in the charts there. Right now this support's going higher, so if this crosses down in here and closes below it, then we're going to go lower. And we have a reverse here as well, so we've taken out this high. There's a little imbalance there. So we have this was nice to go higher inside this range. We'll probably hit 50% already. It's over 50%, 62%. If I pull the larger range here, we've hit 50%, reacted off of that. So if this holds, I'm looking for this to take out this low. If this still holds, then we're back. We've got to get back above this level here. But right now I'm still bullish. Still bullish on this. Still proven otherwise. Sorry, let me just reverse that. We got the reversal here. We've just come back inside, hit it here. So now I'm bearish. So bearish to this premium to discount. So we'll see how we act off this. If we bounce off of this and start to run back through here, then I'm back to bullish again. So we're inside this range. ES. Similar things happening in ES. We've run above that level. We've traded back into it. We ran up higher to 50% of the range. We do not have a reversal though. We have a continuation to the upside. So ES wants to go higher. Look for 44,425. That is downside. Just making sure we're on here live today. We're still connected because I just upgraded my OBS, so I want to make sure we're still good. We are. Still looking for this upside premium array here in natural gas. Well, we may start to see this pull back now. It's already opening up at 6, so it's already opened up inside this. The pre-market's already going higher. That's good. Looking for natural gas to start pushing this. This is UNG, so it's American gas, natural gas here. Yeah, I'd like to see them get into this inversion and start using that to go higher. If we get a retracement in gold back into this consolidation and then start breaking lower, I'd like to see that. So now you can see in NQ, we've actually dropped below that level. 711, and now we're going lower. So Isaiah, your first guess was correct. But initially you had a reversal here, and then this reversal. 50% of that range to keep coming lower. So we were both right. Looking for, where are we next? We're in over here in wheat. So we've hit our upside objective in wheat, come back down, hit our lines, and I'd like to see it drive through that upside objective. And I'd like to see I'd like to see us close above 58.16 and go higher. Soybeans. Soybeans has to get back down below this level. I'd say you have to get back below the consequent encroachment of this on the close to start running back for here. I like this key off of here, this BISI inversion as a continuation to the upside. Got to get through the mean threshold of this candle here now, which is 106.70, somewhere around there. Sugar's hit our upside objective, so I want to see this starting to work inside here now. Because if we close below that level, then we're going lower. And coffee hit our upside objective, now downside. So last night we hit that upside spot we put out there. That was a 4-banger, I think it was, that I keyed off of here yesterday. Did a price extension for that level. We hit that. There's a nice little reversal right there too. You see that? No, sorry, there's not one there. I thought this would be a small one if you expanded it, but it's not. But it did key off that level there. I wonder if there's a... No. So we're right back into this old high, and we're digging into it already, so see how we act off this one. And if we can get through that, then I'm looking for down here. There's a downside objective there in coffee. So we've swept the lows just for the wick. No bodies dropped there yet. So if we can get back up through this level here, then I'm looking for a little higher prices. Cocoa. Again, we've swept the lows, no bodies below here yet. So if we can get back above this level, use this order block to start the next price leg down. Great. If we don't, if we can get back above that, then I'm looking for a continuation. And corn, not that I'm corn, I think I'll get rid of corn. I'm not crazy about that one. It's just that I could trade it on the broker I'm with. That's why I kind of kept it there. Lean hogs. Let's find a projection for you. That's where you're looking for next. Crude oil. I'd like to see crude oil come down here now. We've got a change of direction here, here. We've got multiple changes here. This one did not trade below there, so you wait. This one here, it traded below it, came back into the order block, extended the range. You traded above it, and then you went right back through it. Came back into it right here, extended the range. So I'd like to see a short there. I'm going to put a short on there. And we've already worked inside here. So I'm looking for take profit down here. So I'm looking for that one right now. And I can be 2 above that guy there. So I'm looking for this here to provide support. And I like to see it accelerate through here. And then I'm reaching for the low side liquidity below this here. Gold. Feels like this wants to sink some more. We're looking for, I like this one over here, this little Sibian version here. We've traded through it. We've come back to it. We're reacting off of it now. I'd like to see us get back through this level. Use it for support to keep coming lower. And then from here, there's a couple of little spots. We'd have to get above here, me go bullish again. For me to go bullish, you got to get above there. Got to get above this 730 order block. That bullish candle, which makes a breaker, takes out this low. So we get back through that breaker, through its mean threshold on the close, and anticipate the high, and use that for leverage to take out the liquidity above the market here. You're already in an ultimate trade entry reversal here. You pull that first range. You're up in an institutional overflow entry, or sorry, your optimum trade entry reversal off an old low. If this continues, again, takes out this candle on a close. The fact that we're not pulling back here now. Look at that level here. We did not key off that one. We did not key off this one or that one. All we got is left is this. So if we get above here and come back into this and it holds price, this could be the next price leg higher. Like you could see something like this. I'll run back up above these little highs here. So watch this level right here now. And then we got to get back on top of that. So look at here. If you get on top of that, look at this order block here for support to go higher. So 29.36. It looked heavy there, but 29.36. All the time we stay above here. Otherwise, we're back inside this range again. And then you got these two downside objectives inside whatever range we create here. Bitcoin. Ran that high out. Immediate rebalance. Traded below it. Came back up inside it. Short. Aiming for this sell side liquidity here. And Bitcoin. I want to see this climb up on top of here and start reaching for this high, 1686. Disney got a nice little run through here in the last few hours. Or, yeah, got a little reversal below these lows right here. And look at that. Retrace all the way back to it. Start moving through it. So I'd like to see Disney continue marching up above this level. Start using this order block here to continue pushing higher and back into that range now. Walgreens, what are you up to? Their pre-market's way back down here. This is the new day opening gap they're keying off of down here now. Actually, they're lower than that. They're way down here. This is the box we're looking for down here. 971, that's right on there. They're literally opening up on the bottom of that discount array. Good morning, Chris. Adi, good morning. Joe, Campione, Fiddlesticks. Mats, good morning. What is TradingView's script you're using for new day opening gap? For the new day opening gap, I'll use, who's this fella? New day opening gap. It might be the, what is this one? Not in my list. Might be ICT kill zones. These are usually the, or no, ICT one setup for life. That might be the one I'm using there. I don't use this guy's one. Custom sessions, open prices, I don't use that. No, I think that's this one, the ICT one setup for life. So Walgreens, I'm looking for, they've opened here, so they're actually down here now. They're gapping down. TD, we're finally getting another drop for Royal Bank, starting to break that market structure again on the downside. Did nothing for these guys. This is on February 10th. That's right. Still looking for these to go lower. Let's put this one on a daily chart. British pound. Just using this BISI right now. Get leverage. We've pretty had a good jammer through here on the 3rd. Still got to get above here first. Get some leverage on top of this to push higher. Otherwise, if we come down here now, find support, then we're looking for another run down into this discount area here. So I'd be looking for something like this for British pound. Somewhere inside that box. We've come back down, we've gone through it, come back down to it, finding this, we're keying off of this little area here in New Zealand dollar. We're inside the next one here, so this one you could put right here. So we're going to get, we got to see us get back above this imbalance in here, find some support through this mean threshold, and start running for these highs above us. Euro dollar. We can stay above 103.25 and use that for support. Then look for this candle here. These three candles here to provide support on these equal highs here to start moving back into this range. Put your fib tool on the whole range and wait for 50 and so on and so forth, using your fib tool to scale out. And Japanese yen, I want to see this provide support here now and start pushing higher, running for that next line. Silver's doing nothing right now. This guy's doing nothing. Okay, let's get back to here because I'm in this already. So I went with Isaiah after here. After we changed through here and broke this low, I got short there. Then there's a reversal here. So I got long here. So we'll see how long that I'm moving to break even plus some profit on that one. So I want to see this start now, using this for support to continue going higher. We've worked this all in here already. We traded above it, came back inside it, went higher, traded above it, came all the way back inside it, traded higher, took out this candle here, come back inside it. I want to see it just tap it and go though. I don't want to see this constant repeat on this. So I'm out of there now. So if I lose that little level right there, we'll keep coming lower. All we did was just come back inside this range here. This is why you pull your fib tool on here. Because if I'm in the wrong direction, this trade's against me, like I was in this one here. I got long right here. And as soon as it starts to go and you pull your fib tool on that range, if you make 50%, take half your trade off, move to break even. If it comes back against you, you're on the wrong side of it. Right? So this one here, if you get long on it here, take half your trade off, moves to break even, pay yourself at 62, move your stop loss to 50, and you're out. And if it starts to come back into here again, you can start that whole trade over again and hope for, you've already made some profit on there. So if it does come back here and squeeze you out, your fail safe will get you before your stop loss, unless it does a dramatic rip through. That's why your fib tool can save you if you're on the wrong side of it. There's always variably a retracement back inside the small range that you're in for 50 to 62% before continuing on the downside. So even when you're wrong, you can still make a piece out of there. That makes sense. I haven't even looked at the hourly chart yet. I could be way offside here. We have no market structure break here yet either. This is just a run inside a range. So we've got another reverse here. Traded back up inside it. Between here now and here. Same as this little spot here and here. Just a repeat. And no market structure break. No market structure break. So these are the small little ranges that I keep bouncing around inside here. Overall, you've ran this little bunch of liquidity down here. You could be aiming for this box here. Lots of upside that has no downside yet in the hourly. We'll see if we get back through here and take out this high. Mardeep, good morning. Craig, good morning. Peter, good morning. How are you doing today? Craig, yeah, he's in a lawsuit news item this morning. Yeah, that's why they dropped. Craig Lester, D does a day with a red folder news versus a day with a no red folder news impact. How you trade. While you wait for the news and then trade the volatility. So red, orange, those are the two important ones. Whether they're red or orange doesn't matter to me. They're more high impact news events, even though the medium impact news events and things like uh, uh, the heck's that one? So NFP obviously and CIA. I can't remember the initial now. But there's another big news event that you just don't mess with, just because they're unpredictable. So this is got a reversal going this direction, and we've traded back above this level now and used it for support. So now I'm bullish inside this range, and I want to see if we can get back above this level now and use this level of support to come back into this range, and then I'd be aiming for consequent encroachment of this Monday's 6 a.m. candle. I think that is. My buddy Abs is not here today. He won't be here today. My thoughts are with him and his wife. I hope everything goes well. This one's for him. So now we trade back through this level. Now I'm back into that bearish guy again inside this range. Mean threshold here is holding. Wait for that candle to close. We'll see what we get. Don't make a decision till she's done. $16.17 candle. 17 makes us a little low. Still got the squabblers going on right now. We're still good above here. Mean threshold here now. We keep banging off of it here. This is now a valid candle. We're through the mean threshold here. This is the 21 candle. So see if this just turns on us. 21 to 27 will be a nice little push. If we can start pushing higher. If we get back below this low, then run back down into here's the next objective. See how the fact that we keep digging into that, I lose my love for that trade. Going higher. We'll see where the candle finally finishes off. Overlapping discount. Yep, 4. So we got some big news. Fed Chair Powell and Trump speak this morning. That should wiggle things around a little bit. CPI, that's what I was looking out for. Thinking of CPI numbers are big. Let's see what's going on with these other ones. We got 9:30. It's coming up for 9:30 now. Did we hit our downside objective? I think we're just short of that downside objective. Then it would have came back and taken me out there. So we're in the right direction. It just did not get down below here and get into this, just shy of missing that exit. In crude oil. Gold. Continue to push up higher. Looking for that upside of 2930, 2929 to 2931. Use this here for support now. Once we get above it though. See, we're getting a little closes above. Come back down. So this is kind of like your linchpin. So if you get below this, you're coming back into this range. Get above this again, use that leverage, push higher. We're looking for that to reach into this discount box here still. Just waiting for some news. Move this around. That's what the open does. Morning, Paulette. CPI is Wednesday, yeah. So you keep finding support, you bounce off of this, so then you just wait for this high to get taken. Little seek and destroy mode. Keep taking out these little highs and lows. Back to the consequent encroachment. Morning, Shepard. How you feeling, buddy? Hope you're feeling better today. Imbalance. We're back inside this imbalance. We're through this candle. I like where we're just kind of holding on this level here right now. So this change in direction. Come back, we're just banging on the inside of that. Still finding support to go higher. Premium arrays there. Next one is above you here. These relative equal highs. We'll see if 3032 brings us back, or 32 brings us high, and then 38 brings us back into here. There's the high. I want to see this candle pop up here, reverse, and start coming back down here. We come up to 743. All the way up to 748. Right there. See if that 748 holds. Let's see if we turn around and come back down now. I'll use 748 to key off and go higher. Bugger. Okay. This is your first presentation. Oh, you're at the doctor's for some tests. I hope they find something for you, buddy. It sucks, man. Keep your spirits up. It's all you can do. Pain's a brutal thing. I like this hourly. If we freeze above here, I like using this hourly candle here for support to go higher. So far this reversal's holding. You have to get whether or not you got beat up inside all this for a while. Stop loss sits down here. If you're willing to let it ride out through there, that's pre-market though. Then all of a sudden market, it just lifts off. As soon as the market opens, we're used to that choppy crap we were dealing with yesterday. Now we got a news event day. So 9:30, this is when you can start to see this 10 o'clock start to continue to run down through these big green candles here. Well, you guys probably have big green candles. So next 25 minutes, I'd like to see it close above here. We're obviously aiming for some buy side liquidity here. Above us. You can see how this candle, as it takes out this high, you're looking for a retracement back into this old high here, right? And then all of a sudden it closes above this high, these three cluster of candles right here, and the retracement back into them for a continuation to the upside. That's the upside right there, the 48 to 50, 48, opened and kept going higher. A small little, oh, it's not on your one. Oh, it's even. %50 of this wick and this wick. Return to that little tiny imbalance there. Just tapped it. See if we get a retap down in here now. It'll come back for us, Hadi, don't worry. It'll come back for us. Good morning, Hans. Good morning, morning. As my friends Hans would say, don't forget we got more at the regular trading hour gap to fill in yet. Dee and Darren are standing at the bus stop with our little lunch pails. They forgot us. They'll come back for us, Adi, don't worry. What are these other ones doing? See, now crude oil went ripping through that level. Downside objective was right. This little pullback here. I think my stop loss was really tight on that. What was my yeah, my stop loss was right. It literally, look at that. It literally came back and took my stop loss right on the top. And then proceeded to go to my objective. That's hilarious. So let me reevaluate why I put my stop loss there. And it was just coming back into this. Okay. Yes, this. Yeah, I can see why I screwed that pooch. I put that way, like, you can't ask for a nicer come back and give us, oh, let's take this guy. He's sitting right here, right on that retest again of this one to go lower and this one to go higher. Once you break that, you want to come back, test it. So should have been at least consequent encroachment or above that. Oh no, I think what I wanted to do was just go a couple of ticks above this. Yeah, that's a valid take me out. All right, I'm good with that. I'm all right with that. But what a nice little run. There's your discount array in the larger range down here. You're nailing that now. So box to box trading there and there. That like nailed that perfect entry there for retracement back into here. If you realize, oh, I'm on the wrong side of this now, and it trades back above this level, find support, look for a run back inside this range to here, and then you wait for a reversal to happen on this side. Let me get rid of my chart there. I want to see. It's always important to go back over your charts and find out where, had you been watching it, where it would have changed up on you. And that's the importance of staying on your chart or on your trade. I want to say here, because what's the close on that one? I think it says it closes 73.49 and the low on this is 73.51. So there is a little tiny imbalance in there. It came back and hit it right there. Behind that candle, 73.51. So that little imbalance right there, hit it. Whether or not you see that when it's trading that, and you have to be watching your charts, obviously waiting for these things to literally opens right on it too. Discount array, trade through the discount array. comes back in, extends the range, finally down into the discount box I was looking for. Okay. You got to reevaluate where you went wrong and any changes you could have seen. Well, that's the important thing here is you got to watch it, right? Got to watch your trade. I'm looking for an Asia high to be taken due to moving interest above the macro, then signs of reversal. If not, this moves without me to the next macro. Like in the accuracy today, there run high, close exactly 70% regular trading hours, bodies respecting exactly 50%. Must be random, yeah, for sure. Twelve more minutes. We'll see what happens. We've got this next macro is beginning now. So Erica, Russell, you guys start looking for this macro. Look for a run, the highest taken, and then look for that macro to begin till 10 after 10. Obviously, you're not going to trade it with a big news event coming, but just kind of keep your eyes on this level now and look for that fair value gap to form after this and see if you get your continuation on the downside. So for here, it would have to be a BISI, or sorry, a SIBI that you trade into and go short. So that macro will begin shortly. I think the greatest thing I ever took in high school, other than phys ed and gym class and recess, was typing. I went in grade 10. I went into a typing class. It was one of those minors I could take, so I took it because it was filled with all the girls. But I tell you, it's been the best thing that I actually picked up from high school is other than my commercial art degree. But the typing, the advantage was now I don't even have to look at the keys anymore and I can actually type. So instead of hunt and peck, right? Those happy little accidents. Thanks, ladies. Hmm. 8 more minutes, guys. Did I lose my sound? Oh, I lost my sound. No, it says my sound is still good. Can you guys still hear me? We got you. Sound. It's good now. No. You guys don't have sound? Wondering if this thing's pulling on my cables too much. Okay, so we have a come back to retap. A little consolidation. Not clean. Wait for something clean. Look for continuation to fill that regular trading hour gap. And look for that premium box on your hourly. See this going. What's the low on that? 21,765. My back's hurting. That's why I'm standing. Trying to stretch it out a bit here. Not at all clean action at all, hey? Got to run above this high. Reverse. I want to see this whole thing get taken on the downside and find support in here to keep coming lower. If that be the case, we'll watch this close below here first. Swept liquidity here. Open just below it, come back. See if we just tap this. So when you're looking at it now, just kind of get a beat on where you think you want to see it go in terms of just bouncing off of candles now. You don't really have any SIBIs and BISIs to support each other. They're just BISI buy sides right now. And they're all inversions, I'll give you that. But you're kind of banging around between mean threshold here, mean threshold here. These two candles, we got a bit of a wick here. This one's now validated. So you're really in between these two candles. If that mean threshold goes, you're looking for highs. Otherwise, this mean threshold here, kind of got overlapping candles here now. See if that provides support. Go higher. If not, look for this level right here. It's high and it's open. Oh, it's not good for my neck to keep kicking it up like that. How many more minutes we got? I do 2 pillows behind me when I sit. Yeah, I got a pillow back there. This is actually had a one of those ergonomic people come in. They paid for this whole setup to come in, and after my injury, they came in and paid for this table, chair. They had it all set up for me. This chair is like super expensive, and it's supposed to support your back and everything, but I still have to put a pillow on it. I got the floor mats for your standing, rolling on the floor, your chair. I got all that stuff, but invariably, if your back is out, it doesn't matter what you're sitting in, man. It just hurts. See, now this didn't get, we just came down, tapped it, went through it, going through it. So even the order blocks are not giving me what I'm looking for. So I don't have a Sibby Bissy bounce off like a buying and selling side, premium and discount side. I just got order blocks to bounce around inside, and even though those aren't acting the way I want them to act, so I just sit on the sidelines now. Oh yeah, there's new day opening gaps, there's new week opening gaps above us here. We have those relative equal highs above us still on the hourly daily. Let's look at this hourly here. So this is the premium box to reach for in here. I got nothing down in here yet. Nothing down here. This would be an immediate rebalance. So we'll see how this acts in here. There's also this little fair value gap and this imbalance right here. So we can get it back up on top of this candle, find some support at this on the hourly. I want to see that close there and see if we can use this candle for support to go higher. Ideally, I wouldn't want to see any more than the open of this candle or the mean threshold here. So here's your 10 o'clock news release, or your 10 o'clock jibber jabbers going on. Let's see if they drive that price all the way back up now. See how they came all the way back down to that level right there? Quick tap, closed above it. Now you want to see that run higher. We'll see if we get that giving us that run. Premium box is hit. Now I want to see if it closes above here and starts to run for these highs, or whether it just reacts off of here and comes back down deeper. I like the fact that we closed above here, came back, tapped it, and we're leaving. I want to see that continue pushing higher. Then my next objective is just got to get through here to go higher. Give this a little tippy tap. Sitting now, just being patient, having a bottle of patience by a tea. You're not supposed to drink it, you know. You're just supposed to spritz with it. It's a cologne. Unless you're really working on your patience and you want to drink it. You have the sweetest smelling breath in town. That 950 macro gave us nothing. Silver bullet. This is a 10 a.m. You'd expect to see this to be the silver bullet to go higher. I'll be right back. Don't worry for that. And nothing's happened. Morning, Derek. We've retraced back into this candle's high. So I'd like to see this institutional order flow entry drill for us to continue going higher now. Let's see if we can't get a run higher on that. You've been on for a long time already. Must have been started a little early today. Yeah, I started around 6:30-ish today, I guess it was. Darren sits so still and is so quiet that I think the video is frozen. You don't get really animated until the charts become animated, right? Um, the sniper. Yeah, I'm in my little ghillie suit, kind of frozen there in time. 21/8/24-ish. I'd like to see that at least this rejection block get hit again, or at least hit once. The mean threshold of that candle is held price. I'd like to see us just slowly grind our way up here, at least hit that, and then see if we can't dig into this wick a bit more. This squabbler is a 16-17 candles. so far I'm trying to make sense of all these little inversions. And when they become support resistance levels. Twenty-one 803. Volume imbalance on 1 minute. 21 803. 21 803. Sorry, I don't see it. I see the SIBI here. Mean threshold of this candle, I'm guessing, is somewhere around, that's where they put that line. Just a little bit above that, right there. Find support in here. I want to see that keep pushing higher. Not on. Well, it's not here. It's on the micro. I got a micro right here. Where is it? 803. Oh, I have an 807 to 808. I see what you're talking about there, Hans. I hear what you're talking about, Hans. I see you, buddy. It's like in here level. I see it on my charts down here on the micro. Still looking for some lift here. Still want to get up in above this level, find some support in here and run for these highs. It's just doing it very slowly and sloppily, if that's a word. Yeah, this is a real grind for sure. I pay no mind to macros, charts. I trade micros. Don't make the chart. I trade micros, but use the mini chart for PDAs. Keep your eyes over here. See that little tiny change right there? See that? Traded below it, came back right to it. Now looking for a discount box down here. Bounce off that. So if I want it to act the way I want it to act, you should see it bounce off of here and come back down here. It starts ripping all the way through that again. I'll have to pull the fib from here to here and see what that was it reached for. Just shy of 62%. See, it's already through it, so it's still not acting the way I want it to act. I don't see anything in here that really supports that level. Back into the order block here. We may not get much today, folks. It may be just one of those sit on your hands till the afternoon session. Do you see things clearing up a bit? I like that one, Russell. Up, down, up, down, up, down. I think that was the one when Daffy Duck was going, it's rabbit season, it's duck season, rabbit season, duck season. $21. You got it, Hans. Snap right back to that 803. Let's watch it rip out of there, Hans. And just go. It'd be like, I told you, 803. It's a volume imbalance. Come on, Hans. Light that fuse, buddy. Light that fuse. Send that rocket. DAX 40? Yeah, sure. I certainly can do that for you, sir. Find me a cluster of charts that I don't... Citigroup. I'll give you DAX over here. It's a German group. Let's give you that one. Oh, look at that. Wow, it already blasted through the four banger. Look at how much it acted off of that four banger. Came right back to it. And you got another lift. Suppose your next upside objective would be 94, 229464. And then look for 22,870. Take a half of this as well in there. I suppose from here, I'm just trying to look at what you got here. Looking for that. I'm just kind of playing with this right now for... I want to see some accuracy here. All right, so we traded above this with a full candle. We came back. There's an entrance right there off this high. You see how we traded through it on a close, and you look for a retracement back into this. It takes you weeks to get back to it, but when you do, you get a nice change in direction here. You gap lower, look for a run back to the old high here, and then you look for a reverse, look for a change in direction. So here's your space above, comes back, found support, I guess inside here, or you're inside the gap. You have to get above the gap, which is here, come back inside the gap. So just pull your candle or your box from inside here all the way down to that bottom piece there. Draw that out. Consequent encroachment. Run back up. Look for a tap of this one here. You didn't get it there. And you just kept running. So this retracement, the body above here, back into this open gap here, and then a run higher. Clean out these highs. Breakaway gap. So yeah, I would look for that. I wonder if you can get another right here. I know Derek wouldn't pull it from here. He'd probably pull this one. 2.5, 3, and a 4 up here. So those would be my upside objectives I'd be looking for. Looking for a 3, 3.5, and a 4. I want to make sure that's the right one for swing projections. One. This is 2 right here. So this is what you're looking for next. I've got to have this reversed so you can see it. It's clear when you have it reversed. You'll see the levels. There's actually 2 is sitting right here. So that's 1 standard deviation, 2 standard deviation. So I'm looking for 22,260 for your upside. Ali, that's what I see there anyway. And then once you take this one, look for the 2.5, the 3, and then the 4 banger above that. And if you took, I think Derek would take one from here, because it doesn't take out that. Are you calling me over there? I'll be right back. What's that? Sorry. Uh, the Ali, that's if you pull this one here, or it's almost better when I'm not looking at that other chart. I've been in it for a while, and I want that sucker to work out for me, and it's slowly creeping to where I want it to go. So there's 4 right there. So that puts you pretty close to, even if you take this one here, I think Derek would take this one here as a, because it did not clear out that high. I think that's Derek's rule. You have to correct me on that, Derek, if I'm wrong. But a projection from here, after not taking that high, then you look for a run up to 2.5, all the way up to 4. So you're still looking around 260 is my upside right now for German. Remind me, Ali, come back tomorrow, or remind me later on today to see if that actually made it all the way up there, because I'm curious to know now whether or not that's that projection gives us that lift to that height. Just out of curiosity. So I hope that helped you, buddy. What's gold up to? Gold. We wanted this to get above this level. It did. Look at the retracement. Holy smokes. 50% of that range. And we got a body above there. Look at that. If you lose more than 50% of it on a close, there's the close. You wait, or you put your 1 tick below the low, you would have been taken out automatically. Came all the way back into 50, 62% of that range. Almost 62%. Bodies ended on a 50% of that range. You got to reverse here, come back inside. Now you're looking for it to take out the mean threshold of this candle and this premium array. So you got box to box inside this range. So there's your discount to there's your premium. And then you got to wait for it to get through this level. Let me make this bigger for you guys. So now I'm back to here. Let's get rid of this one. I'm looking for here. So if you're boxing in this little arena here, one, there isn't one here. This is an immediate rebalance. I would treat this as the fair value gap. So discount array, premium array. So you just hit that already. So now you got to wait for it to get through here to go higher, or get through here to go, and the mean threshold to go lower. Get through that mean threshold here to go higher. So you're stuck between that candle, premium and discount boxes. Bingo. Still waiting for us to hit our discount box here. I like this going higher. I got stuff in that. Walgreens. Where did she disappear down to? Look at this. Walgreens. Swept the lows. Now, obviously, I don't want to see this get it through here, so my fail safe's right around in here. I don't want to see it trade through this on a close. Otherwise, I'm back into this range again. And I don't want that. I'd like to see a portion of this. If it's still bullish, I want to see a portion of this fair value gap busy here stay open. So take your fib tool, put it in that whole range there, and just pull your quarters and watch it. See how it acts inside here. Not a good sign, right? Fulfill. So I want to see a snap off of that, start going higher. I was just ready to close that sucker out there. So now my stop loss moves to here because I think I don't want to see it retest this. It's done its thing. It's filled there now. You better leave, or my stop loss is there. So if it comes back and takes me out, I'm fine with that. It's still in profit, so I just want to make sure that it doesn't come below here now. So that's kind of like a fail safe now. It's done its thing. Good. I was looking for this. High line in the sand is here. Tap it and go. I didn't want to see it get below 75%. It did. So if we can get back above this mean threshold here, then we start resuming another push higher. I'd like to see this be another price leg higher. It'll tap me out if it taps that again. So if it hits here, then I'd expect to see it start coming back into this candle. That was close. It almost got me there. Absolutely will. Thanks, Ellie. It's small, so having hard time seeing it, but I think you had it in the same place I would have put it on. Hey, Darren, I hit the thumbs up. You are the Bob Ross of day trading. The Bob Ross. I love Bob Ross. He was awesome. I love it. And there's another guy before him was called Victor Alexander, I think his name was. He goes, fire right in there, fire right in there. He was a really, really passionate guy. And Bob Ross was kind of like this, yeah, man, you just kind of go with the flow. Just let happy little accidents happen. Yeah, let's just fire a little tree in there. Let's see what we have. And oh, look, we just love these happy little accidents. He was so awesome. I love Bob Ross. It's such a shame what his son was going through to try and that family that had just pretty much stole all Bob Ross's stuff. They took all of his name and they put him in a contract because he was such an easygoing guy. They just raped and pillaged his name even after he's dead. His son was fighting like crazy to try and get his dad's work back, but no. There's people that got him in a contract and they hosed him. They got his Bob Ross fortune. I don't know how it worked out. I saw a Netflix special on it. Bob Ross, he was an amazing guy. Very loving, cared about people, and he believed everybody that he put paint on page, and it's a beautiful thing, man. It didn't matter what you thought of it. It was just, it was a beautiful thing. The fact that you're even attempting to put it out there and letting people just be happy with the kind of stuff they could paint. I painted something yesterday. I said to my wife, I'm like, this is terrible. This is like grade 2 painting. She goes, so what? It's like, yeah, good point. Just enjoy it. I'm experimenting with watercolor because because of my color blindness, I've been super color lazy. So I don't even, you couldn't even tell me if you said to me, oh, what's beige? How do you make beige? No idea. No idea. So now I have to practice with color wheels, and because I love color, it looks, to me, it's beautiful. But I wouldn't, I'm so color lazy, I've never actually practiced on how to make colors or even name colors. I had a bit of an issue as a kid with that. I put brown shoe polish on black shoes or black on brown. I was colored reds with green instead of greens and greens instead of reds. And yeah, anyway, so my stop loss is still going to sit right here. So yeah, I love Bob Ross. He was a great guy. Amazing man. So was Alexander. I loved his little accent. This Fahrenheit in there. I just love it. He was a super passionate guy. Um, it was a crazy documentary for sure. So this is when you want to see this BISI hold price. So this is your fair value gap. Now it's not an inversion. It's just a reclaimed fair value gap multiple times. And you want to see it hold. You don't want to see it come through it, come back and now create it as turn it into an inversion. I want to still see this hold price. 1030. We're going into the crazy Ivan reversal. And now you want to see it just, Ivan didn't see you. I want to see him keep marching higher. And I'm not going to chase the stop loss on this. It's slightly in, or it's in profit now. So I'm just going to let it sit right here. If it runs back against me, I'll move to the sidelines. I'm still looking for these equal highs above us here as my upside objective. And I'm still looking for that 21,905 rejection block. And if I can get that, that'll be my trade for the day, and I'm done. It's been a long slog. This silver bullet at 10 o'clock. You have to endure all of this before it finally starts to leave town. So a lot of drawdown for a while. See, I panicked here. Here, I got out here and then went, oh, look, it's above it. Get back in here. And I'm looking for it to keep going higher. So I'm just kind of using this old high here for support to go higher. So I had several trades here off of here thinking, oh, it's going to take my stop. Doesn't, comes back. Ugh, creepy. Finally crept through here. I'm like, I'm out. Oh, wait a second. Yeah, go back in again. So I got in off of that. And now we're still going higher. Stop losses here. So from here to here. And if it takes that high, good. Again, still aiming for that high. Can you do oil, please? Yes, Paulette, I certainly can for you, my dear. Oh, wow. 1 minute chart. 10:30. Look for, always think about a 9-10 turn, Paulette. Look for that 9 o'clock, 10 o'clock hour, a turn on the 9-10 turn. Anywhere inside that 10 o'clock hour. If you don't get it right at 10 o'clock, look for the 10:30 swing. So here's your 10 o'clock starting right here. Reverse. Small little imbalance right here. You trade it above it. You come back into it here. Right there, you just tap it. Now you want to see, if you want to say, well, I want to wait for this to break to the upside, and then you want to see it return to here. Pull your fib tool from low to high and start marching your way up. From low to high, high to low. So there's the small reversal here. You're looking for confirmation above that level, break in market structure, because inside here, you're just looking for a run back up into this breaker right here. So that's your initial run inside this range. So that's with a fib tool you would pull, like Derek was showed the other day. That's the range you're pulling your fib tool on. So you want a discount if you want to go lower. So you go to premium, wait for a discount to go higher, and then pull the next range. And then where's your 50% there, right? If you get in on that, then you're pulling 50% here, 62%, so on and so forth. In terms of retracement, you can see how that 50% would have got you from this entrance here to 50, half your trades off, 62%, move to 50. So imagine it sitting here, then it runs up to 70%. Take a portion off there, move it to 62. Still doesn't come back and get you. Then it runs up to 75%. Then you move to 70 and it comes back and tags you out. And now you've got this reverse happening. That's why that fib tool retracement, if you're wrong at an optimum trade entry reversal and it comes back against you, even if you're on the wrong side of this run all the way back down, this is a typical way or a safe way to kind of protect your money. You have a reverse situation here now, a change in direction. You consider these little highs taken already. So look for a reverse. Always prepare yourself for a reversal. See how it drops below it right here? Came back in and tap it. So now you pull your fib tool from here to here. This is the one I'd want. There's nothing in here. So I don't go for this one first because there's no SIBI in here. I look for a SIBI, a rebalance. So I'm looking for a run back down into this immediate rebalance right here at 70%, all the way down to this little tiny spot right here. So there's your reverse run back into here. 50%, you take half your trade off here now, move that to break even. And then as soon as it hits 62, now you'd move to 50. So you're stress-free on this trade right now. And then as soon as it hits, you've taken a portion right off on 62. So it comes back and taps you out at 50, you're done. And then you wait. And then if you see another reversal in here, you trade this range until you get above the mean threshold of this. Then you start to aim for a higher run again. So right now you're in a discount right off this reversal here. So those are the things you got to look for. Holy smokes, we're on a run there. I'm going to start moving my stop loss up a bit more. So that's what the homework I want you to do, Paulette, and you can put that on the educator's corner. Your homework's going to be look for reversals at key times. I want you to look at for the 10 o'clock or the top of the hour and the bottom of the hour. That's going to be your homework. Look for the top of the hour, the bottom of the hour. Look for a fair value gap reversal below an old low. So looking for a 10, for example, 10 o'clock high, 10 o'clock low at, sorry, you're looking for a high to be taken out at 10 o'clock or a low to be taken out at 10 o'clock or 10:30. So you're looking for 10 and 10:30 to take out a high or a low. Look for a fair value gap inside those. Measure that, mark it on your charts, and give me your point of entrance, the point of exit inside that range. Give me the point of entrance, exit, and then put your stop loss below it. And then we'll talk about fail safes later, because I am a firm believer in fail safes, and I think everybody should use them. So you see how that 62% right there would have come back now and taken you out, and you would have been out of your trade. So if this continues going higher, you would have captured a piece of the action back in the retracement. That's why the retracement works great. It, like 90% of the time, it tends to run back or more. It runs back into at least 50% of the range. So you can take half your trade off and move to break even. You're stress-free, right? So you always hear Hadi and I saying, oh, I'm stress-free. That's why. As soon as you hit a key level, you take a portion off. And if you've got only a one banger on there anyway, like a one handle, one contract, then you've got to make sure that you follow it down. So as soon as you're in, you hit 50%, you better move your profit into, or your stop loss into well into profit to pay for your trade and give you a little bit more, hoping you get 62. And if you get 62, quickly bring it to 50 and wait. If it gets 70, move it to 62. You're always one behind it until it comes back and takes you out if you got a one handle. So here could be another price leg down. So you could still aim for this little box down here. So that's your homework, Paulette. I want you to kind of work on that. So you're looking for 10 o'clock to take out an old high. Look for a fair value gap that forms right here. So this is, it would be 10 after 10 o'clock. Look for a fair value gap. Don't worry about the inversion one. Look for a fair value gap, a retap of the fair value gap, and an objective to aim for, either an old low and that over here. So you'd put stop loss would go here. Your fail safe would be right there, because if it fails, don't worry about fail safe. Just worry about entrance is anywhere inside this fair value gap for continuation. And if you don't have a 10 o'clock taking out an old high, look for a 10:30 to take out an old high or an old low. Look for another fair value gap. So here's your 10:23, 10:30 would be right in here. Look for a fair value gap right there. And you say, I'd want to see that go higher off of this. So tap the fair value gap and run higher to that discount array or that premium portion up here. And then I'd be like, great. So you get the idea of the concept of look for 10:30 and 10 o'clock to take out the higher the low. And that 10 o'clock is a very important candle, same as 9 o'clock. Is that clear for you? Did I make that clear? And anybody else who wants to do that homework, do that on all hours, especially 9 and 10. But do it on all the hours, just to kind of look for the top and the bottom of the hour and look for that fair value gap to form. So where's your fail safe in here? I'm never around when you answer that one. What's a crazy Ivan? Oh yeah. So are you still here? Are you still here, Craig? If you're still here, crazy Ivan, it's not an ICT term. It's a term I used for looking at the bottom of the hour. Back in the day when we had a Hunt for Red October, remember that Sean Connery movie? He's this Russian sub commander, and at the bottom of the hour, he always does. So when he's going like this, he's going along, and then the American sub was right behind him, and they go, "Consodar, crazy Ivan." Everybody goes dead in the water, and then the sub turns to look back to see who's behind him at the bottom of the hour, and then continues. So for some reason, that analogy popped into my head. So at that 10:30 thing, you always see this crazy Ivan thing happening, Where he says look back to see if anybody's following him, and then he starts going higher again. If he sees you, he comes for you, right? So in other words, if we break below this Bissy here, we got Crazy Ivan. He's engaging you in a fight. He's coming back to take you out. If he turns around, does a Crazy Ivan on you and does not see you, he continues going. Sub continues going in the direction it's going. That's the Crazy Ivan. I know it may be a bit silly, but you know what I mean. So I'm looking right here. We'll watch to see where this one closes in the next 8 seconds. Always make our decisions at the end of the candle. Does that make sense? What the Crazy Ivan is? Keep an eye on NQ heading into macro with previous day's high. Take a partial at rejection block. Okay, looking for reversals at 10. Top of the hour, bottom of the hour reversal below the old low. Yes, it is. Okay, good. Thank you, Paulette. That said, this could blow right through the weekly highs resting at 22,100. So look at this range here. What's a feasible level that you can see it come back to? And you want to have your stop loss if you're looking at this and you say, well, if I'm expecting price to continue pushing through the mean threshold, it's already hit the mean threshold of that candle right there. See it? It hit it. And now you're getting a reaction off of it. So if we just pull back into 50% of this range and then suddenly you see it go higher, you got to say, what's my line in the sand? So for here, you pull your fib from high to low inside that little consolidation. And I go right there and I go. So 50% of this Bissy, you got to include that little fair value, that little price imbalance there. I'd like to see no more than this right here, right there. See, we're at 50% of the range and 50% of that Bissy. I want to see it kick off of there and start going higher. We just dipped in below it. That's fine by me. And if we hold off and not quite hitting the 50% of that Bissy, that's even better. It tells me it's more bullish. This was just a retracement. So that's kind of like what I'm looking for right here. And if I start to eat through that and start to eat into this, I start to lose my love for this trade, and my stop loss is sitting right here. I don't want it to be just below here. So if I start closing below that, now I've got a full reversal. And now institution, if it breaks this market structure on the downside, then we've tapped that mean threshold of that candle. Down we go. So here I'm sitting right here now thinking, where are we going to go here? How much more of a dip down in here is it going to give us? There's the consequent encroachment. Yeah, see, not a fun. I'm out of this trade. I'm done. See that little level right there? You have to ask yourself, how much of your profits do you want to give up after seeing this level right here on the reverse? Your rule may be real simple and say, as soon as I see a body trade through that, I'm done. I'm out. If I can get a retap of it, I'm out right there. So that's the first clue that you're coming back inside the range, and you hit it here. And then the next one is, I just want to see it tap this. No. And you see that? No. I gave up. So I've given up all that profit now for the sake of thinking that we just retrace back into this range. So I start to give up hope when that consequent encroachment gets taken. So that would have come down and taken me out anyway. So now, in order to get back in sync with it, if it reverses here and we get a support inside here, I'm looking for that upside objective there. See how it came right back up inside that inversion now? We've traded below it. We've come right back up inside it, tapped it, right to the even, the little imbalance. And now we're getting a kick off of it. So are we going to start heading lower and break market structure here? So we're in a downward move now, right? So you got to be able to recognize right at the moment where you see it happening, how much of this are you willing to give up? If you're really disciplined, Hadi would go, nope, I'm out right there. I see that. That's a rule. It broke the rule. Now your next rule is if this next candle opens and comes back and taps that, that's my long off right there, and I can get short because that's the rule now. We're looking for 50% of the run. I'm going to grab a little piece on the way down, and if it hits 62, and I'm going to take my little trade from here all the way down. So that's literally catching the run higher. You got your rule to get out of it because now it's reversing, and now you close out with perfection and get back in for another run back down. Does that make sense to you guys? Do you see the logic behind? We were talking about that while it was happening, going, ugh, here. Now I have to ask myself, how much of this range do I want to give up? Does that make sense? If you're bullish, you want to get an entry under the macro open time. Reverse for bearish. Under the macro open time. What do you mean by under the macro open time? So here's your 9 or your 1050 macro. There's 949. There's 1050. This is your fair value gap. This is the 10 o'clock or the 1050 macro right here. Don't worry about this one. We're not talking about inversions. We're not, Paulette, when you get your, or Erica, if she's in here, when I gave you your macros assignment, this is not, I'm not worried about this because that's at 1049. I'm looking for the one after that, and I'm looking for a fair value gap, not an inversion. So there's your fair value gap right there. It's like a little imbalance. See how you trade back into it? That's a perfect entry for a short right there off that homework assignment I gave you a couple of days ago, if Eric is watching. And Kevin, if you're watching, that's what I want you to do. I want you to mark out, and anybody else who wants to do any homework, I want you to mark out the macro, the fair value gap that occurs after the macro. We're trading fair value gaps, not inversions. And a lot of you have a really good eye already for these inversions. I just want you to see these, and I want you to mark them out. I want you to take your fair value gap here. I want you to mark it out. I want you to mark your entry, your exit, wherever your exit wants to be, because I'm not going to tell you how to make your exit. You decide your exit strategy. If you want, we'll build that in time. But I want you to mark your entry, your fail safe. Where are you going to put your fail safe? If you understand what they are. If you don't worry about fail safes right now. I want you to put your stop loss in here and just put SL entrance, put a line in here, I'd enter here, and don't worry about your R thing. I don't buy that whole R1, R2 bullshit. It's just, this algorithm does not work in R1, R2 stuff. You just look at it as, where's my exit? Pull your fib tool. If you use your fib tool on that range, I want you to pull your fib tool in the range and say, I'm going to exit here, exit here, exit here, and I'm going to use that strategy. Or I'm looking for a breaker. As soon as I trade into the breaker, I am out. Okay, does that make sense? So that's your homework. And I want you to do that for every macro. From 00, Greenwich Mean Time in Asia. And I want you to do that all the way through to the end of the day. Every macro that occurs. And I want you to do it longs and shorts. And if it's not there, move on to the next one. Because that's developing patience. That's looking for one setup. We do inversions. That's another setup. This simple setup right here, look for it, because you may not see this, but you see this. So you'll start to develop tools in your box on which one to play with to get you the trade you're looking for. It's not just going to be one setup. I want to kind of show you guys multiple different ways you can enter these trades. Because when you start to see them you're in a long, you'll start to go, oh man, that's going to be my fail safe now. Because if it breaks through there, it comes back, that's a short. I want to take that long off. I don't want to wait for it to come all the way back and take me out. I just got to play the rule. The rule is trades below it, I'm out. Trades back to it, great. Now I can get short. Get back in sync with the market. See how that would have taken my stop loss a while ago? Did you guys get that? If you're in here, if you're not in here, then I just wasted all that time talking about that. But that's open to anybody who's interested in doing a little one-on-one session. It's now one-on-one, 2, 3 people. You see why I was aiming for the premium rejection block? I didn't get it because you have to keep in mind the next PD array above me, and then this rejection block, then the old highs, then that rejection block, then 50% of that one, 25, 50, 75, and the high. There's a ton of PDAs in there. If you keep reaching for these ones that are way out of here and it turns on you and it goes, ah, you missed that right there as the turn right at a key point. You go, oh, every time it reaches for that, I go, I'm reaching for the next one. If I see a reversal there, I got to decide how much of my profits am I willing to give up. If this finally drips all the way down here, then runs back higher, how far down am I willing to give up profit for that? Because this could just turn into a fair value gap now on the hourly. Look at this. On the hourly chart, you could see this next candle come back down and give you an institutional order flow entry drill for a continuation on the upside. See that little reverse here? Wait for this order block to get taken on the upside. Use this for support. And where am I aiming for? So if I want to see this range extend, I've got to trade through here and this mean threshold to go lower, because this candle is part of that right there. See how this candle is not part of this, but this one is? That's why you have to take this fair value gap or imbalance and the mean threshold. If it closes below that, then look for range extension. Right now I'm looking for it to close above here, otherwise sideways. This is our little support, little linchpin now that's holding this whole long in place. If we come back and tap it, you want to see that hold. I don't want to see wicks starting to dig down in here. I'd love to see it stop, freeze right on that candle's open. I love that we use the regular trading hour gap, trade above it, come back, found support at it, pushed higher. Now we're coming back into it again. There's a little tiny BISI right here on a 15-minute chart. Which means we'd have to take this out here to come down lower into right there. So into this order block here. Little propulsion candle. Look how we came back to the top of the propulsion candle here and accelerated. So we'll see if this goes through here and we come back in to revisit this one more time, which is at 15-minute BISI fair value gap. See how we're tapping into it? Watch this. Watch how it acts here off this mean threshold. And wait for it to close. See that? Mean threshold. Now watch the body opens on it. Now you want to see it. Now you say to yourself, you've done your job. You should not revisit this. I want to see you leave. That's all. From here, you're inside this small range. Where's the premium? Right there. It's literally those overlapping arrays. That one there and that one are almost overlapping one another. So inside that small little low to high, that's the premium right there. You want to see it close above that. You don't want to see it come back down in here. So watch, even just this formation of this candle, you can almost imagine it on a 1 second chart. It went up to a premium level, reversed, coming back down to a discount level. On a one, like if you look at a 1 second chart there, look what it was reaching for. See, premium box way up there, discount box way down here. We want to see that leave now. We want to see it get back through that premium box and get through and start heading higher, right? That's your 1 second chart. So when you're looking at this 1 minute chart, I'm almost imagining that 1 second chart climbing above that level. So look for this box up here, which is, you know, right up in here. See how we're starting to dig through here already? I lose my love for this once you see that digging down stuff. You didn't get what you wanted, so what do we anticipate? We just ran to premium, ran down to premium, ran through premium. So you're banging it from here to here. See how the candles are just banging back and forth between them? You're in a consolidation. 11 o'clock, 11:10. Macros completed now, 11:10. Move to the sidelines. Macro completed. Saeed, good morning. How you doing? How you doing, Saeed? Good to see you, buddy. Hadi, Darren, look at 1058 fair value gap in the macro time. 1058. 1058. This one here. Which one are you looking at? That's 1057, 1058 right here. What am I looking for there, Hadi? First fair value gap in the macro time. Oh, the first fair value gap. Now, no, this is the first fair value gap right here. There's your 1050 right there. Look at this little imbalance right here. Stretch it right out. You see it sitting right there? That's the one you want. That's the first one. You see that? And that's at 1056. Came right back, tapped it perfectly for continuation. That's the first fair value gap after the macro. And that's where you'd be looking for a short off of that. Yeah. Now you're looking at this one here. You actually want to see a SIBI, not an imbalance there. So now we've getting through here. See how we're digging a candle through there? Now you want to see that come back, tap it, like there. See that? Now you can see it, tap it. Now, this is what you want to work. Mean threshold. Give that a tap and then start working through the mean threshold one more time. I like these little probes through here. It gives me a hint on where it wants to go. Rejection block's already been hit. Let's just give that a little kiss. Roll over and come back down. Take out these lows. And if it's not not acting the way you want it to act, you wait. You're in this little choppy crap price action now. Back up to that premium box again. See that? You've gone through here, run all the way back up to premium. What you want to see is a body get through here, tap it, and go. And if it's not acting the way you want, then you decide whether or not you want to chase this price. You want to participate in this kind of price activity. You got that? You got the trade, or you got what I was talking about here? I'm not sure you understood. Oh, I get you there. You got this for a short. If you do, great, good for you. You're catching, hope you caught a premium off of that. If you caught this one, I hope you caught it right here, just above the premium for a discount. You're really buying late in the run there. If you bought it here, looking for that as your first fair value gap. See, there's another little imbalance right here as well. First one, second one, third one. But you're right, it is the first fair value gap. I look at that as imbalance, fair value gaps, same thing, area of sensitivity, first one. Whatever that first one is, hit it. So now if you're paying yourself below that low, good for you, Hadi, catching that. I hope you caught it at a premium. Right up into through that level. Wicked all the way up there, still closed below that level. Mean threshold. Taking out here. So now I want to see this close below here. Come back and use this candle as support. And we'll see if it comes back and taps that level now. So now pull your fib tool on a larger range. Now this one's done, right? We've already traded back into that. We've done our thing there. So now you got to pull the fib tool from here to look at your new range. 50%, 62% sitting down here. And have we got a SIBI inside this box? That whole range there. You got one sitting right here, so pull that sucker right out to the edge there. You have an immediate rebalance in here, so you could pull that one way out there. So you haven't closed below here yet. I just want to wait for this to close below here first. Close below it, tapped it. Now I want to see that go short from here. All the way up to that little imbalance we talked about. We've closed below that level. This and this whole order block here, these two candles, plus that little fella right there. Let's see if we just get a kick off of here. Oh, you took it off of here, Ollie. Okay. Now you can start looking for these things as well off the macro, because that's really late inside that range for that one. But if the first fair value gap's the one you're treating, then by all means, let's get this sucker all the way down to 62%. Now, that's not to say that I'm telling you guys to change your rules. I'm just saying, have a look at that and see if that fits or gels with your setup. Or if you just prefer a first fair value gap, it's fine. If you take any imbalance after the macro begins, keep your eye on those things as well. So we're already through half this. We've traded on the other side of it already. So again, wrong. We're not in sync with the market now. I wait for this to close above here. And then this premium array now becomes important again. This is usually the 11 o'clock reversal into 60 to 62% of the range that was created in the morning. So now we traded above it, right? So now you want to see this whole price and I'll start pushing higher. I want to see this body break above here first though. Body traded above here, see now? Come back, use this for support. I want to see this start to get a little higher above here now. See some bodies get up here. My objective is up here. I'm long off of this guy here. I'm looking for that upside objective up there. Stop loss is just one tick below here. I don't want to see it rip all the way through all these again. That mean threshold. Puts me right into that other box there. It's me out. It's through my mean threshold. That's going to reverse on me now, then right back to the squeeze. It's going to, I close that out. I didn't let it take my stop loss. It stopped right on the mean threshold of that candle. It came back doing to the reverse 52% or below 50% into a discount. Played chicken with me, and I chickened out right there. So if that goes higher now, that's me flinching. Now that it's run down into this candle and the body stopped in the mean threshold, the wick's done the damage. You don't want to see it go any lower than that now. Or I don't want to see it go any lower than that now. You want to see it get above this level one more time. Even another revisit of this, not interested. See how it's tapping right off that guy right there? I don't even want to see it come back and tap that again. I'm not in it now anyway, so it's a level I'm kind of looking to see if it holds right there and we keep pushing through. And we're on it. Is this a 27 candle now? So we're right here and here. Those are the two levels. So this one, the body, 50% of the wick or the body here. And looking for another little pop down here. I'm looking at this little level right here. Clone. Let's move it right here. That little tiny imbalance right there. See what kind of reaction we get off the 27 there. You see how fail-safe can say if you had your stop loss sitting down here, we already broke through this candle, which is that little breaker that takes out these lows. It's inside this big one. And I guess I could have used the bigger one because these are all buried inside that big one there. It took out all that. One tick below that still would have taken me out anyway, inside this little fella. So you're sitting in on this little imbalance here. There you go. Straight below it now. Back to discount. There you go, Hadi. You mentioned flinching and being scared out of your position. How long did it take you to be less sensitive to adverse price movements when in a position? Well, I just know that if I lose that mean threshold of that level, it's lost its ability. It's not acting the way I want it to act. I want to see it tap that and leave. Mean threshold's my line in the sand. If I lose that, then my stop loss that is sitting down here should not get hit. And if I do lose that mean threshold, chances are my stop loss is going to get taken. So I flinched because I saw this level that I was calling starting to give way. And I was like, I don't like that. Shit. So sure enough, it finally ate through it. Would have taken out my stop loss anyway. Came back to this order block and continued going. Then you put this one down here. You see, I'm inside this range. If I lose that on the downside, then I'm going for a range extension. So it literally closed right here, opened back into the order block, and then a range extension. There's another reversal right here. So now I'm looking at inside this range. So once you look at price action, you say, this is what I'm willing to settle for it. And if I'm wrong, I know I'm out of that trade. Don't get mad at yourself. Just say, it didn't act the way I wanted to act. I just paid some new information for the direction I know it's going now. But that's after you've studied price action enough to know I'm on the wrong side of this. Now I can get back in, you can get back in sync with it and either make your money back for what you just lost on that little run from your entrance, wherever I had my entrance sitting. I think I got off that high there. It started going higher. It came back against me. Took my mean threshold. So I lost from there to wherever that last counter was right there. And now you pay for new information because I know it's heading into the discount portion of this. And if I take that, I know the range is going to extend. So I'm really would have taken out my stop loss. So Erica, once you see the price action enough and go, that level right there should not break. And if it does, I'm wrong. Fail safe. Move back. Follow your rules. Because if you hung on that, see, it broke that, it hit the mean threshold, then wick down, and you have to wait for the candle to finish. That wick down was enough to scare me out. Just said that, it's going to take my stop. I was one tick below there where I closed it out anyway. So it literally would have taken my stop. Ended here. If I would have waited for that candle to finish, I could have gone, all right. As soon as you get that little pump back up there, you say, now you can get out taking a smaller loss versus a bigger loss. That's the only argument you have with the fail-safe here, is if your rule is wait for the candle to finish or let it take your stop loss. If it still trades above 50% of that wick, you say, great. Now, if it comes back and taps it again, you're out of dodge. Just get out of there. But you have to develop your own rules around your fail-safe. And you have to be confident that you know it's changing direction. And if you're not, then you fail-safe, you're not going to have a solid fail-safe because you're not sure where you think price is going to turn. But we'll get you there, Erica. Don't worry. We'll get you there. And don't get upset that we're all gonna take losses, right? You just got to be able to say, all right, I'm just paid for some new information. And this is really high resistance again now, and we're into lunch hour. So if you want to keep giving your money back, keep playing in these high resistance lunch hour up and downs. So Erica, what I want you to look for is that 1150 macro and say, where would 1150 be a logical place for this to catch a reversal off of? We look at the run that's occurred this morning from 9:30. The whole range that's created this morning. You want to see a run on the people that are trailing their stops. You got 62%, will put you right into this cluster here. They got all this liquidity sitting here. So unless you see a break in market structure to the upside, I'd be looking for 50, 62% down here now. See how that level has come back and just tapped it multiple times here now? So now if you get back through, there's another one right here. And your premium one is way up here. There's another one right here. If you're not looking at this imbalance, Remember, bottom of the hour at 11:30, look for a fair value gap right here. See that one? Come back, tap it. That's a run back up inside this range. So when you're doing your homework, again, there's your fair value gap. Not looking for an inversion. We're looking for a fair value gap. Come back, tap it. That's a long inside that range, 50%, take half your trade off, blah, blah, blah. If you're using that, there's your premium array. You've hit it. So that's just the only setup I want you to look for. It's one specific trade setup that happens bottom of the hour, top of the hour. That's all I want you to kind of match this up. So the homework I'm asking you to do is to look for this piece right here and say, I'm entering in here, here, or here, those three levels that are inside that fair value gap. And you say, my stop loss will go below this low. Mean threshold's my line in the sand. That's my fail safe right there. I don't want to see this trade below this and into my mean threshold. And then I want to aim for this. If I can reach through that, great. That's my trade. It's over and done with. If I can reach for a mean threshold, leave a little piece on for mean threshold, half wick, and a higher premium array up here, then I'll do that. It would have come back and taken you out by now anyway. So you would have made some little piece inside this range here. And if you have the patience to wait for this specific setup and all your stop loss is here, your leverage and your failsafe is there, you're watching and you're going, my failsafe didn't get hit. I got my objective. As soon as I hit 50%, you're into a stress-free trade. Now focus on just breathing and letting the trade pan out. And then just keep scaling out and slowly moving your stop loss up. And if you feel the anxiety of that, then that's something to practice because you're risk-free. Get into risk-free when you can. And if 50% of that range is risk-free and half your trade is off already, you're already in profit. So we come all the way back to it. Box, box to box to box, back into box again. So that's 2 rounds of boxing in a consolidation. Discount box, premium box, round 1, 2, 3, 4, 5, 6. As if it just keeps going back and forth between these premium and discount arrays. And if new ranges create new new premium and discount boxes, look for a smaller compression box to box to box till it finally breaks out one of those and extends the range higher. Now watch it. It's already touched this one. See how we've gone down from round 1, round 2, round 3, round 4. So we've already hit 4 times. You've gone from this box to that box to this box to that box. Now you want to see if this box extends and then start running for the highs above you. And unfortunately, it's in a shitty lunch hour type of situation. So the enticement to play in there is there. Thanks, D. After making $2 yesterday, playing it safe with pre-CPI, made a little more green today. I will figure it out one day. You'll get there, Craig. Don't you worry. And don't forget, just because I'm reading it doesn't mean to say this is how you read the markets. You know, you saw how many times I was wrong today. So you got to try and stay in price action. When it's super choppy like this, pre-CPI, like you said, you want to play in that. You've got to be super nimble and follow your rules here, man. Otherwise, you will get chopped up. And these little ranges, you got to be prepared to say, that's all I want. From there to there, I'm nibble my piece. I'm out. If it comes back there, I'll go one more time and I'm out. My stop loss will be all over here. That's that buffering thing I was telling you about before. You get to buffer any losses that you would have taken had that come back against you. So you take that trade to there. Oh, great. And if it comes back there, I'll take it again. Oh, twice I got that. So it's like taking this range and that range and adding them together. And it's like having put a trade on here and getting out up here all the time, still being inside this small range. That's boxing, man. You got to have confidence to run boxing like that. That's a Muhammad Ali boxing champ who can catch boxes like that with zero stress. You'll get there. I've been completely out of sync this morning when didn't get the 50% of yesterday's range. It made me unsure of most of my up so far today. So think about what you're saying there, Erica. You're saying I didn't get 50% of yesterday's range. So you're looking at a daily chart and you're basing these 1 minute candles on I haven't hit that 50% yet, instead of just staying in the price action here in a 1 minute chart. Very little reference has been made to an hourly chart. We've been banging back and forth in these small little ranges. That's an internal range liquidity, small hunt, sniper day. Don't worry about you didn't get 50%. Just stay inside here. If you're looking at 50% and that's what throws you off, I didn't get that. And meanwhile, during the day, it's been giving you bomber type entrances that are clean if you have the patience and the wherewithal to see them and get in on them. Don't worry about the daily. If you're not in a daily chart that's clean, move to an hourly chart. Are you in an hourly chart? Nope. Move to a 15-minute chart and really start sniping. And if you don't have a 15-minute, then trade like in these small little ranges. But this is no different than a daily chart. The algorithm is still the same. This is all fractal. So just keep practicing this. Don't worry about that over there just yet. Focus on this. What's price action doing? How do I stay inside this range? Because that's no different than if I was trying to stay inside a daily range that was doing this. I still have to understand it. So if you understand it, save yourself the aggro of the daily, trying to hit the perfect bias for the day, and just stay inside this chart. You'll be bouncing back and forth in these small little ranges, but you're still practicing price action. You'll get better at that once you get better at looking at these lower time frames. This is just a faster price action than having to wait 20 days for it to go 20 candles that we're seeing in here. This is just giving you an opportunity to practice at a faster pace. And if this is going too fast, go to a 3-minute chart. If that's going too fast, go to a 5-minute chart. And then really break it down, analyze it, and see if you're, for example, here's a 5-minute chart. You get a reversal here. Now you want to see it come back in there. If it doesn't, then you go, oh, where am I inside this whole range here now? If I break below this low, this little swing low, if I get a body below that and come back into that, I'd like to see that continue coming lower. If I trade back above that level here, I'm back inside this range now. Upside objective is here. If I trade through that, then I'm looking for a higher run. So you wait for 10, 15 minutes now to see what kind of reactions you get off of it. These are lower time frames. Look at how much they're bouncing off of that in a 5-minute chart. You're back inside this order block. You've traded below this. You come back inside that. That's a short. You've got a reversal here, right there on a 5-minute chart. You've taken these lows out here. This is a long. Back inside this range. So now you're looking from here to here. You want to see this candle hold and come back deeper inside this range from box to box. If you close below this on a 5-minute chart, where you stay, if it closes below that, comes back and taps it, you're on the wrong side of this. We're expecting range to extend. And you got 50% of the wick, or sorry, 50% of the body. So this, half of that, if you close below that, come back into it, expect to see a range extension. If it doesn't, if this holds price and we start getting above this candle, then you look for that premium array again. Pull your fib tool from high to low. We're doing exactly the same thing we just did on a 1-minute chart. That's my premium above there. So I want to make sure I get a deal in here. So there's my entrance is inside this reversal. And as soon as I get to 50%, I'm going to take half my trade off, move it to here. Stop loss will be sitting down here. And my stop loss doesn't get it because my fail safe is here. If I break below here on a close, come back in, they're running for my stop, I'm out. That's my rule. If it trades back above this again, I wait for the high to get taken and then start running back into if I can catch a little discount below here to run to the premium array. So in here on a 5-minute chart, you're still looking for a long. And this one here, you see how they're overlapping? You got this one, and that one. So this one supports going shorter, and this one supports going longer. So now you're inside that range. You say, all right, just sticking inside a 5-minute chart, I'm looking for a premium level. So I want to get above. As soon as I hit 50% of that range again, this is a stress-free trade. If that reverses on me and continues to support this breaker, then, or this order block here, then I made some money on the way up. So watch, if it hits that 550 or 843, watch that. If it hits 843, then your stress goes to zero. You've paid yourself half, move your stop loss to break even. If it comes back and takes you out, you're done. 5-minute chart's over. That's why we practice on a 1 minute, just because it's moving a little quicker so you can see. You can just see what you want and study it a little quicker. Peter, that's some serious discipline, man. You haven't taken a trade today. Good for you, buddy. That's something you celebrate. Don't put a frowny face. That's discipline, recognizing that this is high resistance and you didn't take anything here. Awesome. Good for you. That's exactly it, Erica. I like these. I like inversions too. To me, they're stronger than basic fair value gaps. But if you recognize, all you're doing is trying to train your eye to recognize these imbalances, fair value gaps, inversions, previous swing high, previous swing low, breakers. They're the main things that you look for. And if you see them and you train your eye to recognize them, and you recognize the small range that you're in, you may be just trading inside one daily candle to another daily candle. And go, all right, that's where I'm at. I'm in this asset that I've bought that I like, and I want to see it hold there. Yeah. Then you just wait for your setup, but start developing your eye to look for fair value gaps. Because if you start to try and ignore fair value gaps and just look for inversions, you're already looking for the after the fact, right? Look for the fair value gap and go, ooh, if that turns into an inversion now, I can get, you start to anticipate what you can get from it, right? See you later, Derek. So your 5-minute chart. See how we're down through that level already? So now you sit there and go, my stop loss is here. So watch. If this rips through, then you take a loss and you go, okay, I'm on the wrong side of this. If it comes back into this, I'd like to see that go short. So you wait and see. The fact that it's even dipping into that a second time, I don't like it. I want to see it one time and leave. This is high resistance. And your lunch hour. And your pre-CPI, your post-news. Not a super strong. So I like the fact that Peter was disciplined enough to not touch this today. We'll see if this kicks back and still goes through here. Can I show you the gold? Yes, I can show you the gold. So change of direction, reversal, enter into your long premium array. You ran through your premium array, went higher, took out the highs, We can come back into these two candles right here. Now that's what you want to see, tap and go. You want to see it leave from here. If it starts to eat through this here, now that becomes the new swing back inside this range. So then you're heading for this guy right here again. If you eat through that, 50% of your range, that's the small range. If you want to take it from, no, I don't like that one there. I like this whole thing. So start drawing out your boxes, Saeed, from here to there. Mean threshold of that candle. That's the same situation I was just telling you about earlier. If I lose the mean threshold, I'm losing my love for this trade because this is all hermetically filled again. So if I close below that, then I've got a reversal situation of 50%, 62%. And you have to ask yourself how much of your profits you want to give up here, which is exactly what we just did on that last one. You don't want to see that fill. You wanted to see 50% of that would have been really nice and then leave, or this kind of snapping off of the bottom of it there. Great. Now I don't want to, now you should say, I don't want to see it revisit this. That should leave. If it doesn't, then we got 50% of this range here, which is exactly what we were just talking about. I think it was on a 1 minute chart in here. See how we lost that on a 5 minute? Traded below it, closed below it, comes back up. That's the loss. That's the fail safe right there. As soon as it goes, trades back up, if it comes back down and taps that, my rule for my fail safe is I'm out before my stop loss gets taken. I lost from there to there instead of from there all the way down to here. That's what fail safe's about. And now you can say, now I got to get back in sync because I'm on the wrong side of this now. Range will extend. And sure enough, the range extends. So it's okay to take a loss, but you're not taking this massive dive and you didn't take your stop loss. Your fail safe saved you. So that would be a loss, Erica. And you go, oh, wow. And again, you shouldn't have been in it because it's lunch hour. Okay, now we're hitting an 1150 macro. There's 1150. If you come back through here, or just tap this for a continuation on the downside, or you wait for your first fair value gap to occur after this. So you wait and you see if this is it here. Tap the fair value gap, keep coming. Just kind of watch. No, it's not. You want to see if it comes back up and gives this a tap now. There's no fair value gap that's formed here yet, unless you look at that one. But that one occurs from 1149 to 1151. Oh, sorry. Let me get back to the gold guy here. So I want to see that continue pushing higher, get through this order block here. That body's lower than that one. It's got to get back through here. See, I don't even like it's coming back down in here. You may get another revisit of this 50% here. We close below here. These are my downside objectives that I'd be looking for. And you're looking for the hole in the wall to find support on to repel down. Then all the way down to the bottom here. That's got to hold though. I like this snap back. It's nice. Get on top of that candle. This could be a nice little projection. You see where that puts us? Look at that next price leg. If that next price leg goes higher, look where it puts us. draw from here all the way across to premium array with the break, with the candle that supports it right there. So your premium box would be here. And it will hit it nicely. That's the upside box in gold. Thank you. It makes me feel better. Yeah, like celebrate that, Peter. Be okay with that, my friend. Oh, how I long to be on the oh well stage. This losses. Right now, it feels like I'm wrong and I won't ever figure out how this. Oh, that's a good, honest statement. Now you think about which one is an empowering statement. Oh, well, I just got some new information. I just paid for some new information. No different than if you pay for a broker, you pay for a trade, you pay for all that. That's just, you just paid for some new information. Versus, oh my God, I'm never going to get this. I'm so wrong. I am wrong. So you're wrong? No, the algo is not acting the way you want it to act. You got to give a more empowering statement to yourself. What you say to yourself is so crucial to what you do. Wherever your attention goes, when your energy follows, and if your attention is focused on I, self, and negativity, you're just going to reinforce more of that, Erica. So I know it sounds easy to say, but you really have to focus on changing disappointment into opportunity and start to see it as opportunity. Because when you recognize that trade I was in that was wrong, for example, when I was way up here and I was going, oh, I don't want to see that trade through the mean threshold of that candle. And then it traded through the mean threshold and then wicked down and took me out, wherever that the one was that took out my wick. I can't remember if it was over here or over here now. I say, okay, I'm okay. I took some loss. So get back in sync with the market. Don't beat yourself up. Look at it and say, how do I get back in sync with the market? And if you feel like I'm wrong, don't trade. You're not ready to trade now. You gotta get past all that stuff. And that's just paper trade until you see it and you feel comfortable with it. And people don't have the patience to wait for that kind of feeling to settle in on you, because just to try and get it with paper alone is a big thing for some people. Then put live money on it and see how you have been grateful for practicing that with paper. Self-talk, so important. So important in anything you're doing. Trust me, I had some real bad times with my back beginning of January. I thought, oh, all that terrible stuff about all the surgeries I've had in the past, what my wife would have to put up with, and that she didn't deserve having somebody in her life that was constantly having back issues, and I can't do simple things, lifting and stuff, all that negative shit. And then she's like, look, I love you for who you are. I signed on for this. I love you no matter what. Now, get your head straight. Let's go. We're a team. And it was like, all right, get refocused. I know how terrible it can be thinking negative shit about yourself. So, Erica, your homework is, I want you to rephrase everything you've just said in a way that empowers you. And you keep fake it till you make it if you have to. Find an empowering belief about that. See what I showed you there and say, yes, it does work. What he just showed me, does that narrative supports that. And if I can just buy into the belief that that's available to me too, then I can have that too. There's no reason why you can't. But I tell you, it's going to take a lot longer journey to get there with the belief that you can't. and stumbling upon it sometime in the future, then I will, I have it. I see it myself doing it right now. What he just showed me is exactly what I'm going to get. I said that about Michael. I want that. I said that about my paramedics when I was a first aid teacher. I was teaching first aid years ago. I want to be a paramedic. I knew it. I saw it, visualized it. That's the thing I want. Took me years to get there. When I got it, I went, I want to be a paramedic instructor. I want to teach doctors, nurses, paramedics. I want to teach advanced cardiac life support. I want to teach pediatric life support. I want to teach trauma life support. I want to teach big courses so people can, I want to pass that knowledge on to people. And I did it. I didn't get there going, oh, I suck. I'm no good at this. I'm no good at this. I saw key people who knew what they were doing. I go, I'm going to copy that guy. I'm going to copy that girl. She's amazing. How do you do that? Ask questions. How do you do that? Want it. Want it, Erica. It's yours. Okay, Erica. I've been talking to Erica and she's not even here. Well, if you watch this later, Erica, I'm rooting for you. Hang in there, girl. Chris, you're not doing your homework, man. Everybody else, some people have taken over your private thing. This one-on-one. This started for you, man. Now everybody else said, hey, look, if Chris isn't going to do that, can I do that? I'm like, yeah, all right. They're doing their homework, Chris. Are you doing your homework? If you're learning anything, show it, man. Let me see what you're doing. You got somebody who's willing to work with you over this one-on-one, and you're not taking me up on it? You're on your own, man. Until you can figure your journey out, you're on your own. Do your thing. Erica's taking you up on it. She's done some great homework. Russell's done some great stuff now. So they're following the homework practice, man. Kevin, you are the man. Not many people can allow their ego to do something like this. I try to help you guys 16, 17 learn how to be a man by working on profound learning life's lessons more than anything, just learning to work, really work. Yeah, I appreciate that, Kevin. Remember 62% in the range? What we're aiming for? I am scaling this mofo down. I'm in profit. I got this short off of here, and I'm going short on there. And I'm in profit now, so where's your downside objective? I'd be looking for right here. Oops, I'm on the wrong one. This is the one I'm looking for. I got in short here. Where's my downside objective? Shitballs. 62%. Remember we're pulling our chart from 62% of the range that was created at the beginning of the day, 11 o'clock. You look for a retracement back on a large portion of the day. I gave you this earlier. And these, again, more notes to take. Just key things to look for at specific times. There's 62%. This done, dusted. Have a nice day. You got your 62% retracement from 11 to the range run on the day. And you caught a nice reversal all the way up here. If you would have been disciplined to catch this and just weathered all that shit from 11 o'clock, man. Anyway, I'm still not there yet, so don't. That is my thing I'm still working on, trying to hold it for a longer time. I'm trying to get to Michael's level. I'm seeing it. I want it. I want to be just like Michael, man. I want to catch this. I want to be better than him. I want to be better. And that's not ego. I just want to be better. I want to be better. I want to see that stuff. I want to be in this thing. I want to catch every little move. And then I want to fine tune it to the point where I'm not jumping in every 5 seconds. I can just say, right, I've got my time. I've got my time in a bottle. I've got my boxes. I got my premium. I got my discount. I've got my range. I'm good. Put it in. Walk away from it if you have to. Let the trade run. That's where I want to get. And I didn't get there going, oh, I hope so one day. Frick no, man. Take control of your life. Work it. And work. Put the freaking hours in and study, study, study. So looking for this old breaker right here. Look for Tuesday's first presentation. And, oh, sorry, this is the 6 o'clock candle. Come get you some 6 o'clock action, baby, right there. Boom! You just hit it. Look at that. There's your 6 o'clock. Abs, that one's for you, buddy. Right off that breaker. Schmuck. Beautiful. Okay, Kevin, take it easy, buddy. Love the positivity in here. It's really an amazing thing. Keep up the good work, and we will all get there. We certainly will. This community is going to move mountains, man. Move mountains. Look at that. Right back to that breaker. How lush and delish is that? Like right on the beezer. Remember the Rascals? Anybody ever... How many of you guys are old enough to remember the Little Rascals? Spanky Alfalfa. Oh, stand up. Now, if we keep running, pull it. Original consolidation, market maker sell model, first stage accumulation, distribution, second stage accumulation, unicorn trade. If you're into unicorn trades, second stage distribution, there's your unicorn trade. Take out the original consolidation that started the day. We'd be trading below here. Do you guys see that as a unicorn or not? I know there's the unicorn. You listen to Michael's talk describing a unicorn. They're pretty specific to some people, to different people. But second stage distribution is usually what you'll see is it'll go down, up, down, second stage, and then you just go straight down. You just see this big, huge drop here. So look for this box here. If we hit that box, man, that's some beautiful boxy action from an obvious fair value gap way up here. Look at that. Bang, 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 bang. Hit it. Drop below it. Come back up inside the premium. Bang. Discount box right down here. That's 200 handles. 840, 850 down to here is 6. So 150 handles or so, 160 handles. First box is here. One of your discount boxes is right there. See this one here? Look for the first one. Look for the breaker, the first one, the second one, and then the last one. So all these ones, you're going to pull them out as reaching points for discount arrays. Powell testifies before Senate Banking Committee. Is this still live? Oversold, overbought, oversold indicators. Get out of that, Chris. That's all retail crap. Overbought, oversold. That's just a retail candle, a retail thing. Get out of it. Nobody uses that. Just study the algorithm, man. Watch the algorithm. Algorithm is way more alive than those overbought, oversold indicators. You're seeing a level of precision here that overbought, oversold indicators are not going to give you. I don't care how well you set them up. They will never give you a perfect entry or a perfect exit. That's why I don't trust them. And the fact that they're retail built anyway. So we're just shy of hitting that first box there, or that discount box. Where is it? How close are we? So close. What's the low on this candle? Oh, stand by. I screwed it up, and I'm going to show you why I screwed it up, so it's not looking like I'm form fitting it. We have this little imbalance right here. You have to include the imbalance in with the fair value gap. So now you draw it over. Now we've hit it. There's a discount, your next discount. So we hit this one. Next discount, if we drive through that, look for this one, then look for this one. But that's a beautiful little, and then you just look for a reversal. Anytime you hit these, you're looking for a 1 minute reversal here now. And if you're looking for a market maker sell model, typically you'll come back to the original consolidation and take out the original consolidation. And that's where the market maker buy model started. So we'll see if that comes true. The 8:30 open. Oh yeah, 8:30 right here. Oh, Adi, look at you and your 8:30 candle. Well, yes, steely-eyed missile man. Yes, I see it now. You have to please remind me about that every day, man, because that's it's interesting. You're interesting me now because I like that. You got me focusing on that now. That was a nice, perfect bang off of that, hey? And there's right off of Monday's 6 o'clock candle. So 6 o'clock candle, Hadi's 8:30 candle, and we'll see how well that holds now. See if it rolls through that and starts to take out this side and head for the discount. Oops. Remind me about that every morning, Hadi, because I keep forgetting about it. Good. Now, do you have that as a downside objective when you're aiming for it? I do like it. It's an interesting, it's definitely inside this downside objective still. So right now it's overlapping the discount box and still giving you the 8:30 candle here. Or this is the 8:30 candle here. That fair value gap, turn into it, trade through it. Just trying to see where this, oh, look at this, Adi. You probably already know this already. If this is your 8:30 candle, look at this. You just draw that out. Look how sensitive it is off of that level. He's saying, you don't need to tell me, brother. I've seen it right there. See that? Draw straight through that first fair value gap after 8:30. or right on 830, I guess. 830, fair value gap. Is it a sensitive level? Man, okay. Remind me about that, my friend, and we will, I'll play that one some more. Watch for this level to get taken now. Dang. If you're new to our channel, pop in every morning. We're here. Subscribe, hit the notification button. We'll let you know we're in the markets. We're just chopping away here, trying to make the best out of a choppy situation. And if you've hit the like button, 34 of you, would be nice. I appreciate you hitting the like button. If you like what we're doing. If not, by all means, don't hit it. But subscribe if you're new to the channel. We're here to help you out. We're here to motivate you. It's not all just about taking trades. You know, sometimes you got to work on the psychology, and you know that we're here for you. This community is here to help you move your trades forward. Don't be afraid to ask questions. There's no such thing as a dumb question. Ask. Put your ego aside and learn. I got a guy in here who's got his master's degree in economics, and he's still asking questions. He sees something that there's some logic in there, and he's asking questions. No ego. He's learning. That's a master's degree guy. So if he sees something that he likes, why not learn it? If we're showing you something new, or if you've already studied ICT's principles, which I suggest you do, and don't pay anybody for it, then come here and we'll show you how to read each damn candle and each range, each order block that's really where you expect price to be held. And things like fail safes. I know they're not an ICT thing. I know the Crazy Ivan is an ICT, and I know they're just like little affectionate things that we've been giving the markets to make these little moves. And the time in the bottle is not ICT thing, I know, but it's still based on some principles that he kind of alluded to that some of us have expanded upon. The initial first presentation, fair value gap, it's a standard thing everybody looks at now. But ABS has been into that for years, and the same as the first 6 o'clock candle, and there's the same as Ad's now looking at this 830 first fair value gap after 830. So again, looking for a low. Don't see anything yet. I don't have a reversal here going on yet that I can see. There's probably a small little imbalance right here. And you got to break above here. Now we're into that 16, 17, 18 squabblers. The squabblers. Let's go through some of these other ones. We finally hit that level. And gas. Oh, good for you. Looks good. I like it. Nope. Wheat. We're still looking for wheat to go higher. We're looking for this. They start climbing higher. We're looking for that. We're looking for that to get down here. We're looking for this to get back above these. That hit the objective we were looking for today. Look at that. Nailed it. Ooh, yeah. That price action, price projection, nailed it on the Beezer this morning. You're welcome. On lean piggies, little piggies. Reverse, run into this direction. Look for a reversal here. Literally closes on it, comes back inside it, hits it perfectly inside there. This is one of those questions, the things you guys have to decide whether or not you want to do these. Close on that and trade back into it. Short, looking for a low, run on the lows, takes out the lows, imbalance, trades up it, banging around inside it, through that level. We did not get through that level on a close. We just traded all the way up inside fair value gap and mean threshold here. reverse, trades below it. Another one open. See how this one here, right there, closed on it. Look at this one, closed on it, came back up, hit the mean threshold, traded through the bottom of this, took out the lows, extended the range. Don't see anything here. There's a small imbalance right there. Look for that level. Ran higher. Look for the premium array, discount array, premium array. You run through it on a close. You come back inside that whole range. Continue going higher. Extend the range. Reverse. Trade back inside it. Look at that. You closed on it again. Trade back inside it. Now you want to see it come lower. Discount, so premium discount inside this range. That one there and that one there came all the way up to premium discount, premium discount, premium. Did it hit discount again? Nope, just shy of discount. Now it's hit discount again. So in this little range right here, you can see how many times, how many rounds of boxing you have. I want you to see these. You have to understand what these little ranges are. So when Paulette's in here digging around inside that oil, looking for oil prices, and you're looking about inside range, internal range liquidity, and how these premium and discount boxes can get hit. Look at how many rounds of boxing you have here. So you've got this, you trade back into it. So there's 1, 2, 3, 4, 5, 6, 7, 8 rounds of going back and forth, back and forth, back and forth inside this range. So you add up all those differences and you go times that by 8 and see where you'd been up if that had actually continued. Just playing boxing. You have to see it enough times to go, yeah, I get it now. Whether or not you're going to trade that, it's just, that's a 1 minute chart. That's consolidation inside a lunch hour. Crazy. Anyway, boxing. 8 rounds of boxing. How much money can you make on 8 rounds of boxing? We wanted this to go way up there. It's already traded below that level, so remove that idea. Reverse. Took out these highs with a wick. Reverse. Body closes below it right here. Literally opens below it, comes back up inside it, trades perfectly, runs the lows out. Creates another reverse. You want to wait for it to trade above this. Trades above it. Now if you can get back into it, great. You didn't. So now you're more than 50%. Let it go. There's the premium box. Discount. If this wick would have come back here and just give you a little tap, you could have gone box to box. That's boxing inside the range, internal range liquidity. And now if it extends beyond that box right there, you'd expect to see it go higher. So see how it closed above it? That's my rule. Closes above, great. Now if it could just tap that and go, I'd be interested in catching that long. But see how it trades below it again? You go, I'm on the wrong side of it. You pay for some new information saying, I'm not. This is going to go long or short on me again. So it closed below, and you guys need to see this. And this is the kind of discipline you got to be able to see it, because this is where it, and this is, may not be Michael, he may look at this and go, this guy's on crack. But this is how I look at it. That's my rule. It traded below it. I'm on the wrong side of this. We're back inside this range again now. This range from here to here. In a second, I'll pull the fib tool on that and you'll see if that's 50% or more. I'm on the wrong side of it. So get back in sync. If you're trying to go long there and all of a sudden it closed below that, you go, I'm on the wrong side of this. Take your trade off. It trades back into it. Now get short. Whatever loss you took there, you've now gained it back, pulling your fib tool inside this range. And that's the kind of the, oh well, as soon as it hits 50%, I'm taking my trade off, or I'm taking 50% of my trade off, and I'm moving my stop loss to break even plus plus my entrance. So right there, plus my cost of my trade, half my trade is off. If it comes back and takes me out, I'm out. and you've made all that back, plus a little bit of profit, plus this one's been a stress-free trade, and you just went, oh yeah, I just paid for some information to tell me I'm on the wrong side of that. And that's how you got to get to that. You just say, all right, I just paid some new information because it's giving me a new direction. You have to be confident that that is a change in direction once that inversion is taken on the other side. And watch how many times that pays out. If that makes sense to you guys. Bitcoin finally hit our downside objective we were looking for. Look at that, right on the money, right on the beezer. There's a box-to-box trading, my friends. Inside that larger range, box to box, all the way down to here. Inside that range, that's the discountiest one I can find, and this one here. So there, the range extends. The next one down is in here. This one is slightly lower than that one, so I take this one. And look at that, right to the beezer. Now, you have to say, does it extend the range? If this trades below this, then we're expecting the range to extend. If it trades back through it, you say I'm on the wrong side of this. You pay for the difference, and then you start to run back into this premium array with these order blocks, obviously. And then if you can get above that guy, then you want to see this one finish off. Again there, trade above that one, look for the mean threshold of this candle, and then you start aiming for the next one, which is above you there. Does that make sense to you guys? Lagging indicators. I don't even know what a lagging indicator is. Can you talk to me about your candle dots, please? Love the way you teach and explain ICT. Wish I could have found y'all sooner, but I'm here now, and that's all that matters. I'm already learning new things. Good. Well, welcome. Tell your friends, invite your family, friends. That's what we're here, build our community. The dots are my time in a bottle. Go to my channel, right? Let me see if I can find it. Anyway, just go on my channel here, go in the video section down below, look for time in a bottle, and you'll see what all those dots mean. And you'll be like, holy crap, that's not something ICT teaches. But you see, I built that thing years ago, and you look at how accurate it is on a 1 minute chart. And I show it to you on all time frames. And one thing I haven't shared with you on there, which I'm sure you'll figure out if you actually study it, it's good for all year. That's why I'm building a calendar. And I tell you, you'll probably get the calendar sometime in July when I'm finally done. I'm trying to show you my top 12 trading strategies that I like. And I explain each one of them to you. So I'll build the whole, like this would be a January candle or page. And you'd have all the January stuff down here with time in a bottle that I've built in for you and things to look for this month. And then I've also given you a specific trade setup to look for that month, so you can focus on that month if you're relatively new to trading. And I think I'm on month 5 or 6 right now. So yeah, go there, Peter, and you'll see it explained to you. It's called Time in a Bottle. Darren Hancock's Time in a Bottle, ThetaWaveTrader. How do the dots work? Is it an indicator video on it anywhere? Yep, it's time in a bottle. Is lighting up. Would you look at it, please? Disney is lighting up. We saw that little reversal going on there. Oh, what's going on here? We wanted to see it kick off of here. Then all of a sudden we opened 15 minutes and dropped, hey? I love the precision of this, man. It's just so freaking amazing. Breakers. I tell you, you guys catch these breakers? Look at this. This breaker right here. See that candle right there? Watch when I do this. Work. Look at how freaking precise that is. We trade below it, come back inside it. Beautiful thing, man. It's a beautiful thing. Craig, so we're off the daily inversion fair value gap. This is a discount array. I'm looking for more discount arrays down here. So on a 15-minute chart, you've got a small reversal here. Inside this range, I'd be looking for liquidity up in 109.37, or this first one is here off that little candle, a bunch of candles I gave you here. I'd like to see a retest of this and see if that rolls over and goes down below here. See how we ran up, came back down, we hit it and reacted off of it. Then all of a sudden at 9:30, it gapped down on us. So here's something really important I want to kind of point out to you guys. Here's the discipline. Here's the Hadi kind of discipline you need. So let's say it hit this level and you say, great, now internal range liquidity, I'm looking for this run. Now that this fair value gap, or this range from this low to this high, I've come back into a discount. Now I pull my fib on the range, and I'll show you how. I know this is after the fact, but I show you this every freaking day. I entered in on a discount. As soon as it hits 50%, I take half my trade off and I move to break even. It hits 62%. I move my other portion of my trade to here. I take 10% off there. So now I'm at 40% of my trade is here. 60% of my trade has been taken off already. And then all of a sudden it goes, and so it goes whammo, and it opens up down here. That's where you're going to take the hit. You're not going to take your stop loss right here where you had it moved up to 50%. It literally gapped down here. That's where you get your stop loss taken. So all the money you made inside here offsets the gap down here. Because even if you had your stop loss sitting here, you'd still have to pay at the first print of the next candle. That's why you've got to have the discipline to pull your fib tool and do that stuff. If you don't, here's another example of boxing. Box, look for the premium inside that range. And where's the premium box? Right here. Little tiny fella right there. From there to there. And if you don't have the discipline to recognize that, there, I've hit my box, pay yourself, move to the sidelines. Now, again, this is Walt Disney. Do you want to pay 20 cents to yourself or whatever that is, 40, 50 cents on a $100 stock? No. Most people want to catch that for a lot bigger return on their money. But when you're trading on a 15-minute time frame, that's the kind of stuff you got to look for. So here, there's a little tiny imbalance down here, this little SIBI. Craig, so I'd like to see this candle here find some support. We have taken out these lows. So if you can find some support here to run back into the range from there to there, 50, 62%, so on and so forth. You have a gap that needs to be refilled. And I'm giving you a 15-minute time frame. I never even asked you what time frame you want me to show it to you on. But that's what I see right there on a 15-minute. Hourly. Let's go daily because you're a long-term trader, aren't you? There's the daily discount array. Oops, let's move our little fella here. I can't believe it hit that freaking candle right on, or that carrot right on the beezer. Like, how beautiful was that? Right where you were calling for it too. So premium discount. You've hit the discount. Now you're getting a bit of a reaction off that. You're inside this range. Where's your premium now? Pull that whole range. Let me clear all this stuff off of here. Let's start this out of here. Draw these out, Craig. Put these all on your chart. Oops. Pull the holes out of the walls. Got that? So those are the holes. Those are the steps in the walls you want to see on the way back up. Shoot for this. Shoot for this. Shoot for this. Then start running for the wick, the rejection block wick, and then look for the next one above you here. Now you watch those levels in the days to come, and you watch to see how much support you get off of them. That's your rock climbing wall. Okay, so just pull all those levels out of your wall, and that's the steps you want to climb on to get higher. Pull your fib tool from low to high as well. It'll give you a good idea of where liquidity is, where things are premium and discount. If you want, go in here like this, just hit your temperate and hit equilibrium. Now you know where your premium and discount is. I take my little fib tool or my little tool like this, put that on there, and then you put in here. So now you know where your high and your low is, your equilibrium is. Now you know where your premium discounts are. So if you can start getting on top of these, you're looking for, if I can break, if I'm running back up into equilibrium of that whole range, that's what kind of areas do I want to find support on to get there. And we'll leave those on there, Craig, because I want to see how they pan out. But that's what I'd be looking for, Disney. Wait for a break in structure right here. Market structure break, return into here. We're breaking that low, looking for a run down into a discount portion now. I'd like to see that keep coming lower. Looking for your fib tool now. 50% sitting right here. So first profit, 21,759. You want to see this candle hold price now. Unless this starts go, if it cuts back through this to the upside, look for these little imbalances. If they close above them, then this is the next price leg higher, and you just paid for some new information. I'd like to see it hit 50% of this little range here. There's a lot of buy boxes in here, so there's some liquidity on the way up. So we'll see if we get down there. Can't believe it can't break. We can't break 1,120 people. 1,127. I think it's 1,129 people. We still haven't broke 1,130 yet. This month has been really slow. Last month, I think I was minus subscribers last month, and then I think we gained like 1 or 2 people. That's okay. We're still having fun. Anything else anybody want me to look at before I head out of here now? DAX. Oh yeah, we're looking for that upside DAX 20 or 260. We got above that level. I like that. Now we're pushing higher. That's excellent. We wanted to get it above here. It did come back, found support of that candle. Keep pushing higher. That's what we're looking for. Looking for this next level here. Lovely. And then looking for a retracement back in. I like to see it accelerate through here, get back into this candle's low. 1036. And support. Get through here on a close. Look for this to provide support. Start climbing for a higher. Look for the next upside objective 2934. And then look for 2934.6. Dixie says, show me a little Dixie action. Dixie, I think I got Dixie in here somewhere. Euro, US Dixie. Let's review. Reverse, change of direction. If this candle rips through 1, 2, 3, you look for the last one it takes out before going up higher. If it takes the higher one, then you take the next one. So this one here, you're looking, it opens lower, runs up higher, takes out the high, comes back, gives you another entrance in here to go higher. And you can't really base it on there because this is a June calendar or June contract. So look for, mark your discount arrays out. Does it trade below? So here's your reverse here. Does it trade below that reverse on a close? It does. Does it come back, find an exit, an entrance for a short? Right here for a short, extend the range. Takes the range out. Looking for a reversal now. Excuse me. Look for your reversal right here. Candle takes that out, takes this one out as well. So now you move this guy into here. On a close, taps it, taps it, taps it again. Looking for a low. I know Michael takes this side here. He's more interested in this one. And that's fine too. I like that. Institutional order flow entry drill for continuation. Doesn't fill the fair value gap. SIBI, sorry, doesn't fill this fair value gap. BISI's consequent encroachment. It's just shy of that. That's a very bullish sign. Look for run on liquidity. There's the premium array, discount, premium box. So if you're trading from a discount box to a premium box, you're looking for exit right there. The premium, you're done. 2 candles, 2 days, up candles, you're out. If it closes above that, we're looking for range extension. So closes above it right here. You get one little opportunity to tap it and range extension. You get range extension. Now you're looking for a reversal. Trades below it, trade back up inside it. Small little pop of a range extension inside that small little fella right there. Back to this order block. You want to see a candle trade above here. It trades above it and trades above that high, all in one candle. So what do we say? If you take out one, you take out two, you go back to the last one that it takes out here, trades back to it, you're long. Reverse. You wait for this to get below here before you consider coming back into this discount box. So boxes are here. And now you don't forget, you got to look at these as giving you the information you're looking for the contrarian point of view for your foreign currencies. So if this is going down, you're looking for foreign currencies to go up. So if you're boxing, here's how you box inside the Dixie. You wait for price to drop below our premium box right here inside this range. We have a discount box and a premium box. So in order to do internal range liquidity hunt, we wait for price to trade below it. It does right there. You don't get an opportunity to get in on it, runs straight down to discount box. Then it comes up in here. So round 1, round 2 comes right back into a perfect entrance. Round 3, right back into it. So box to box. So it went from here, didn't give you your entrance, ripped right down to the box, tapped it, right back up, give you another opportunity, back to another one, hits it again, extends the range. We have not traded below there. All we did was just wick through it, right? All the way back up to the premium box again. Now you want to see if we get through here on a close, look for the mean threshold of this candle. If we get through that on a close, look for these equal highs to get taken. If not, box to box. You're just doing internal range boxing right now. That mean threshold is holding price back. You're watching. This is a pivot point. As this is a pivot point for a high, this one is a springboard to dive down lower. If it gets on top of it, then it's a springboard to go higher. This one here, springboard to go higher. That's where you bounce. You go boing, boing, and you keep trying to bounce onto that one up to the next one, which means there should be downside pressure on foreign currencies. If this holds and we come back to here, then we've got upward pressure on foreign currencies. Go to your foreign currencies and you look for something that supports a downside run in terms of a box-to-box run. So let's say this is your premium, that's your discount. Look for your euro dollar now or something. For what level was that on? That was a US dollar hourly. Let's put euro on an hourly. Let's have a look at that one. We have a discount box right here. So if pressure that's the discount. So you want to say if price is going to go lower on the American dollar, this should go higher, right? Premium box. Our premium box for our euro dollar is right here. So is there something in the American dollar that supports us going higher if the American dollar goes lower? Oops. Oh, that's Canadian dollar. Sorry. Dixie. Where's Dixie again? So if this reverses and comes back to another box-to-box trading, that comes back to here. Where's the upside objective in euro dollar? Right there. Does that make sense? Lambo! Trust all is well. Hanging in there, man. Hanging in there. My back said I pretty much had enough right now. Does that answer your question, Mark? How to do boxing inside the Dixie and what kind of things you're expecting in other foreign currencies. Now you combine that with Six Sister, which one's the most likely, comparing pound to euro, and then looking at how strong the pound is, how strong the euro is, then go to the pound euro and look for the confluences to see which one's the strongest one out of the two pairs. Then lean on that one and then look for the stronger trade. I just want this little downside trade I've been trying to get here to hit. I'm just going to go to break even now because I just hit my little objective. Come on, hit it. Hit it. It's just boffing around there. It's just right near my take profit here. There, got it. All right. So sorry, that's back here. Looking for that 50% of that range. That's all I was looking for a trade short off that 50% of the range right there. That's all I wanted it to do. Just hit my small little profit off this order block and just run to here. So 780 to there, it's like 26 handles. Now if it stops there and starts going all the way back up again, internal range liquidity hunt, right? I just took the full profit there. I didn't take half off. But anyway, you got that, Mark. Okay, good. Anybody else have a question they want to ask while I'm here? And I'm happy to answer that before I go. Return to this. I'd like to see that roll over and come back down some more. Just remember down in here, I don't have a SIBI other than this guy here. And that's more advanced stuff, is looking for these immediate rebalances. The candle comes right back up and immediately rebalances the range, that little candle. Then I'd be pulling that one over as a little discount, potential discount box if we're going to keep coming lower. So I want to see that roll over here and come down now. Anyone else before I head out? Nope. All right. Well, that's it for me, folks. Thanks very much for tuning in. If you're new to our channel, please, again, just pop in, say hi. We're happy to have you. We're happy to teach anything new here. Nobody's trying to take your money. Nobody's trying to rip you off. Nobody's trying to sell you anything. We're just here to play with the charts, study price action, get better at reading price action so that your charts are less stressful and that your setup, you feel more comfortable about your setup. I'm not here to try and convince you of my setup. I'm just trying to show you how to read the price action so that you're better apt to manage your own setups, so that you feel more comfortable and you don't have all that stress, because you know with a higher degree of accuracy where you think price is going to go to support your trade model. Always keep in mind, every time you take out these little lows, you got these things here. So it trades above that, gets above this candle, we're coming back into this range again. And then you start hunting for your premium array. All right. Other than that, Adi, thanks, man, for that 8:30 jobby. I like that. was a nice little idea. The 6 o'clock candle, the 8:30 candles, the opening range candles. Man, there's some beautiful stuff there, my friends. It's delicious stuff. We're adding new stuff all the time. Well, it's not new. Michael's been knowing it for a long time. But anyway, we're playing with it. And it's good. With our beloved Fib tool. I want to get a license plate that says Fib 62. Then people are like, what does Fib 62 mean? 62% retracement, baby. OTE. Anyway, there's your analysis for the day. I look forward to seeing you guys tomorrow for CPI. It's going to be crazy CPI tomorrow. So we're expecting a little mashing around in here sideways now. CPI numbers come out 8:30 tomorrow, and then we're looking for some juicy price action to get in on for the rest of the week. So I'll see you guys tomorrow bright and early. Take care. Enjoy your day. Get out there. Hadi, get out there and enjoy some sunshine. Make a snowball or something. Get out there. Talk to you soon. Bye.